Okay. All right. So what's in today's agenda? Okay, today's agenda will include what is a forbearance plan and do I qualify? Questions to ask before requesting a forbearance. Um, what to do after you receive a forbearance plan, how to repay your forbearance plan if that's applicable. Will forbearance plan negatively impact your credit score? Where can you get advice to see whether or not you should apply for forbearance? We're going to be speaking about additional resources, and obviously we're going to hold off on all of your questions till the end of the presentation. Just jot them down so that you won't forget them. I will be able to answer each and every one of you, okay? So don't be shy at the end. All right. So a lot of you may wonder, what is a forbearance plan and do I qualify? A lot of mortgage lenders describe forbearance plans as deferral payments, right? So you'll probably hear that word. Are my payments going to be deferred or am I qualified for a forbearance plan? So please remember those two words. Now, a forbearance plan is used when you're experiencing difficulties making your mortgage payments due to the national COVID-19 crisis. A forbearance plan, if you are facing difficulties making your mortgage payments, maybe this might be an option for you. Okay, so the forbearance plans does help consumer get back on their feet during short-term financial difficulties, but there are a few things you need to know and need to know about some important decisions that you will need to make. But again, before you get yourself into this forbearance plan, you need to know the pros and the cons to everything. Um, a forbearance plan is when your current mortgage servicer, which is the company that you make your payments to, right, allows you to pause on your payments for a limited period of time. So typically nowadays, forbearance plans are for 3 months. Okay. Um, so usually this started maybe in March, April, and that's when the forbearance plans came into place. And they're good for 3 months. All right. So a forbearance does not erase anything that you owe. Okay, that's very important to know. A lot of people think, well, okay, so I was approved for a forbearance plan. I'm debt free for 3 months for my mortgage payments, and maybe I can pay other bills in the interim. Okay. No, a forbearance plan does not erase anything that you do owe. You will have to repay any missed or reduced payments in the future. Um, so if you're able to keep up with your mortgage payments, it's highly recommended to continue to pay them. Okay. The types of forbearance plans vary depending on the loan type. So if your mortgage is backed by the federal government, which is like an FHA mortgage, a Fannie Mae, a Freddie Mac, a USDA, a VA, those are all protected under the CARES Act. Okay, that will allow you to temporarily suspend the payments, but only if you are experiencing financial difficulties, again, due to the COVID-19 and the coronavirus. Now, before you can even think about entering into a forbearance plan or signing off on that document stating that you are accepting this forbearance plan, these are things that it's recommended for you to ask. Okay. Um, in order to be able to apply for this, to request the CARE Act forbearance, you'll need to reach out to your mortgage servicer just to ensure that you are ready for the conversation. You need to prepare yourself, and hence the reason as to why you're joining this webinar today. Okay. Now, you need to be um, experiencing a hardship. Okay, the hardship due to the COVID-19. So it's got to be pandemic related. All right, so whether it is impacting you directly or indirectly, this may be available to you. So a lot of you may wonder, okay, so what are the criteria you will use to determine my forbearance? Um, that's one of the questions that you should be asking your mortgage servicer. So one of the things that they're going to be looking for is, that keyword by the COVID-19. Have you experienced a reduction of income, loss of hours? Have you become unemployed and now collecting unemployment benefits? Have you had to take time off from work because you've had to take care of a loved one? So these are all criterias to be able to determine if whether or not you're eligible. Okay. Also, what are my rights if I disagree with your determination? So, meaning, can I appeal the forbearance plan decision? Okay, so if you are denied, what else can you do? Can you appeal it? Is there any type of documentation that you can send in to prove that you're unemployed or maybe you've experienced a reduction of income? So that's the second question. And what are options available to temporarily reduce or suspend payments? And the reason why this portion is in the slide is because there are two types of forbearance plans when you enter them. Temporary reduction includes, let's say, for instance, like with us with Greater Alliance, you would, although you're on a forbearance plan, we don't necessarily approve 100% of the mortgage payment to be forbeared. So you will still have to pay your escrows. You will still have to pay property taxes, homeowners insurance. However, the principal and interest payment will not have to be paid for 3 months. Okay. Or let's say, for instance, there's another type of forbearance where you would suspend the payments for 3 months temporarily. Okay. So those are the two types: a reduction of your mortgage payment for 3 months, or suspending the mortgage payments for 3 months. Okay. But that's a decision that your mortgage servicer would have to advise you of. Now, are there forbearance, loan modifications, or other options applicable to your situation, and what fees are associated with each option? Now, keep in mind, you will not be eligible for a loan modification unless you are receiving income, right? So a loan modification cannot be applied with unemployment while earning unemployment benefits, because unemployment benefits is not considered to be verifiable income. Okay, it's something that's not permanent. A loan modification is. So that's why you need to know what the difference is between the two. A forbearance is a suspension. A modification is a restructure of the loan, right? So to be able to include maybe um, any mortgage payments that you might have missed, or due to the reduction of income, um, they may be able to modify the payment. So those are questions that you should be asking your mortgage servicer if you're expressing a lot of concern with your financial situation and with your income. Also ask what fees are associated with each option. Typically, there are no fees associated. Okay, under the CARES Act, there shouldn't be any fees, no late fees or anything of that sort during the forbearance period. Okay, so it's very important to just, notate that fact. And again, you can find all of this information via the CARES Act as well. All right. Also, when will you be able to waive the late fees on my mortgage account? A lot of borrowers um, are within the first month of their forbearance of asking for a forbearance plan, and so it's already, let's say, for instance, today. Let's say you make the payment today is after the 16th, so obviously you're going to have a late fee because the mortgage payment hasn't been made. So you have to ask that question: can my late fee be waived as of today? I'm currently being reviewed for forbearance plan. And just ask. The worst thing they can say to you is no, but more than likely they'll be willing to work with you. Okay. What are my payment options at the end of the forbearance plan? Very, 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 very important. If I were you, this would be the first question that should be asked. Okay, and the reason why is because there are two types of payment options. Okay, and we're going to definitely enter into details with regards to that later on. And will the interest be charged on my unpaid mortgage payments during the forbearance? So that's definitely another question that you should be asking. Now, everything that you ask, and let's say, for instance, they respond to you and you decide that you want to move forward with the forbearance, get everything in writing. So once you're able to secure the forbearance or any other mortgage relief option, ask your mortgage servicer to provide written documentation that confirms the details of your mortgage forbearance agreement and that you're clear on what the terms are. Many individuals enter into this type of plan without knowing what's going to happen at the end. And to be honest with you, at this point, we're taking it as on a day by day basis. The reason why I'm saying this is because maybe Governor Phil Murphy expressed, that he's implementing strategies like, let's say, right now for due to the COVID-19. But once this is all over and done with, then what's going to happen? Here you are 3 months into this forbearance plan, and if you have, let's say, for instance, a a Fannie Mae backed loan, then you will have to repay those 3 months that you didn't pay before. So these are things that you really, really, really have to ask and get everything in writing for, because you have to be clear on what you are signing for. Because at times, and you're really procrastinating the inevitable, you're going to have to pay this one way or another, whether the three payments are applied towards the end of the mortgage, or you will have to pay it at the end of the third month of the forbearance plan. Okay, so what to do after receiving a forbearance? Okay, um, number one, while you are in the forbearance period or working under another mortgage relief option like loss mitigation, whether it be a loan modification, short sales, or things of that nature, there are a number of things to do to continue to protect yourself. Okay, but what are the things that you should do immediately? Well, one of them is keep a written documentation on hand. I can't tell you how many people lose their forbearance agreements or their modification documents because, let's say, you're ready to refinance or you're ready to sell your property. Here you are, years pass by, goes along, and now they're giving you a payoff. And in this payoff figure, there's a lot more that you owe because you were in a forbearance plan years ago. So you can dispute any charges if you keep a written documentation on hand. Okay, so you want to make sure that you have this documentation available in case there are any errors or on your monthly mortgage statements to ensure that your statement reflects the assistance provided. So you need to have the written documentation and always keep a copy somewhere safe for the end of the forbearance plan or for later on when you're deciding to either refinance or sell the property. Okay, pay attention to your monthly mortgage payments or statements. Continue monitoring your monthly statements just to make sure you don't see any errors. So if you receive your statements by mail, make sure you keep track of this forbearance plan and there's no errors. Very important. Stop any ACH payments for your mortgage, any auto payments. That's when your mortgage payments are deducted every first, fifth, 10th, or 15th of the month. Stop that because it automatically withdraws the full mortgage payment from your account. That's not going to stop even if you have an agreement um, with your mortgage company, because that's just automatically generated and it's going to continue to pull from your account. So if you're having your mortgage payments deducted from your account, you have to make the necessary adjustments just to avoid any fees or charges that are unnecessary, right? Also, very important, keep an eye on your credit. It's a good idea to routinely check your credit scores in order to make sure there are no errors or inaccuracies. Um, if you were otherwise current on your account and have receipts and accommodation, your account should be reported as current. If you stop making the payments without a forbearance agreement, the servicer will report this information to the credit companies, and it can have a lasting negative impact on your credit history. So it's not that you automatically um, are approved for a forbearance plan. You have to apply for the assistance. Unless you apply, you will not be reviewed. Okay. And again, keep an eye on your on your credit. Go to annualcreditreport.com. You're entitled to one free credit report a year from all three credit bureaus, and you can take a look and see if whether or not your credit score has been negatively impacted. So what you can do is maybe go to annual credit report, pull it from one bureau currently just to see where you're at with all of your finances. And then definitely take a look maybe 3 months or 4 months after the forbearance, or 4 months after you check your credit, and go to Experian just to see if whether or not um, your mortgage company is still reporting the same. All right. Don't pull from all three credit bureaus at the same time from annual credit report. Again, this is so that you can continue to have access to your credit report. All right. So once your income is restored, okay, so let's say, for instance, you obtain your job back or you find another employment, contact your servicer so that you can resume making your mortgage payments. With a forbearance, you still owe the payments that you missed, but fewer missed payments mean you'll owe less down the road. And again, this is all because of the two types of forbearance plans that we were talking about. There's one that you will have to pay at the end of the third month of your forbearance, whether it is an FHA mortgage or a conventional mortgage. Although you have some relief for those 3 months, then you have to take into consideration that once that's over and done with, 3 months later, they're going to say, okay, you know what? Your payments are 2,000 a month. It's been 3 months. You owe us 6,000, and now we're seeking payment. So what happens at that point? Well, you're going to have to enter into some type of a repayment plan, which means that you will have to make your mortgage payment plus you'll have to add an extra, let's say if it's $2,000, you'll have to add another $1,000. So the next 3 months, you'll have to pay $3,000 each and every month to be able to catch up on I'm sorry, if it's two, it's 4,000 in order to be able to catch up on the other months that you didn't pay because it's only a 3 month repayment. Okay. Now, what happens if it's the third month and you still don't resume employment? Then at that point, you're going to have to ask for another 3 months. So that's why I say it's very important that if you do not if you do not need to enter into a forbearance plan, I highly recommend for you not to do so. Okay, because again, there's pros and cons, and again, this will still have to be paid. Now, if you've lost your job and your income is not restored, then this program is implemented for people who really don't have that income to be able to repay. All right. Now, if your loan is backed by your mortgage servicer, right? So it's a portfolio loan, meaning, let's say, for instance, Greater Alliance owns it. Then what we can do is we can defer those payments, right? Take those 3 months that you didn't pay and place it onto the principal of the loan. And that's going to be kind of like in a balloon at the end, that it's in a 0% interest free bearing loan. And that doesn't have to be paid until you either sell the property or refinance, but you will still have to pay that. Okay. So those are the two types of forbearance plans. It all really depends on who the investor of your loan is. And later on in the slideshow, we're going to talk about how you're able to find out who the investor of this loan is. Okay, whether it be Fannie Mae or whether it be a portfolio loan. With regards to it being an FHA mortgage, you will know right away because when you initially signed for these documents, you know it's either FHA or FHA, the bottom line. Your investor will not change unless you refinance the loan. So if it's an FHA mortgage, rest assured that it will still have to be paid at the end of the third month. Okay. Now, if you still face a financial hardship, you can request a forbearance extension under the CARES Act. You have a federally GSE-backed mortgage, so you can also request an extension for an additional 180 days. Okay, but also please keep in mind of what's going to happen after this, right? So if you extend it for another 3 months, so let's say for instance you're on this forbearance plan for these, it's a total of 6 months, then what happens? What's going to happen if you're still unemployed, or let's say for instance if you obtain employment, now you have this verifiable income? What are your options then? Okay, what are you going to do then? You're not going to be able to pay back maybe the $4,000, or now it's 6,000 a month, right? So at this point, maybe a loan modification may be an option, because your hardship has been resolved because you've been able to gain employment, and you became unemployed through no fault of your own, but because of the COVID-19. But let's say, for instance, you seek this other employment and your income is not the same. Let's say it's less. Then, definitely speak to your mortgage company about a loan modification at that point. That is your resource at that point. Okay. But let's say, for instance, you're able to pay in the interim this forbearance plan while you're collecting unemployment, while you're receiving the stimulus of 1,200. I mean, you can certainly add that towards the mortgage payments just to try to owe less at the end. Okay. Um, so if you're going to ask for the forbearance plan, you have to ask the mortgage company directly and say, okay, typically we do call a month before the 3 month forbearance plan ends, just to see where you're at financially and to see whether or not you do need an additional 3 more months. But again, if you really don't need the program, then I would recommend for you to continue to make timely mortgage payments. Okay. Um, your property taxes and your homeowner's insurance should continue to be paid if your mortgage has an escrow account. But if you may want to confirm this with your servicer. So if your mortgage does not have an escrow, you will still be responsible for these payments, as well as HOA and condo fees during the forbearance. So don't think that just because you're not making the mortgage payment that everything else needs to be set aside. No, everything else will still need to be paid, because who's going to pay the property taxes and homeowners insurance? You know what I mean? So it's very, very, very important for you to keep up to date with these things. Okay, if not, then let's say, for instance, if the taxes aren't escrowed or the homeowner's insurance isn't escrowed, then your mortgage company will do what is called a forced escrow. And that's when typically the mortgage servicers will charge you at least 3 times the amount of what you're supposed to be paying for homeowners insurance, because they've forced placed it. Okay. So it's very wise to always keep that current. Now, how to repay your forbearance plan. Okay, there are a lot of ways that you can repay the forbearance plan. So before your forbearance period ends, you will have to make arrangements with your servicer to repay any amount suspended or paused. So please contact Radar Alliance immediately if your financial circumstances change during the term of your forbearance plan, just so that we can discuss any potential options to resolve your delinquency. Again, the sooner we try to resolve the issue, or resolve making to get you back on track so that you can continue to make your contractual payments, the better it is for you. Okay. Um, One of the things that I do have a lot of questions on is, okay, so if I'm entering into a forbearance plan, um, what's going to happen if I decide to refinance, right? So again, I've talked about the fact that during the CARES Act, with the CARES Act, your credit is not negatively impacted because you're under the forbearance plan. But that doesn't necessarily mean that if you're trying to take advantage of today's rates, okay, and although you're, let's say for instance, considered current on the mortgage for those 3 months, um, that your new mortgage servicer or your new mortgage company won't give us a call to obtain a verification of mortgage. Okay, so there's, again, that's that other con with the forbearance plan. So although yes, it's going to give you some type of relief for those 3 months, and although yes, you'll have to repay it at the end, but also, will you be able to refinance in the very near future? Um, the answer will be no, because they're going to give us a call, or they're going to give your mortgage company a call for a verification of mortgage, and they're going to ask, when was the last time this borrower paid their mortgage? And if the response is, okay, well, they entered into a forbearance plan, they haven't made a mortgage payment for 3 months, then your new mortgage company is going to say, hold on a second, this loan is a risk. And more than likely, they'll deny it. Okay, so be very, very, very careful. Now, remember that under the CARES Act, you have a federally or GSE backed mortgage, you can request an extension. So remember, if you are approved for this forbearance plan for those 3 months, you do have an additional 3 months. The method of repayment varies depending on your loan and the options offered. Not all borrowers will be eligible for all options, because remember, we discussed that if you are receiving unemployment benefits, you're not going to be considered for a loan modification. Okay. And if your income has been reduced after the forbearance plan, then how are you going to be able to repay the repayment plan? So that may not be an option for you. Okay. So ask your mortgage servicer how these programs work and what you can expect in terms of repaying the amounts. Okay. You don't want to be caught in the dark at the end. All right. Just as forbearance may differ between the federally backed agencies or entities, so does the repayment of the forbearance. So prior to the end of the forbearance plan, we will contact you to discuss your situation, okay, and provide information on options that may be available. Options to resolve your delinquency may include a reinstatement. A reinstatement is a form to be able to bring you current. Okay, there are some mortgage companies that have those funds available for reinstatement, but to be honest with you, I don't see that much. Okay, the ones that I do see that are available is the repayment plan or a loan modification. These are all retention options, okay? But if you're unable to resolve the delinquency, there may be options that may allow you to leave your home while avoiding foreclosure, okay? Um, because once you're 3 months behind, right? So let's say, for instance, the 3 months is over and done with. Typically, after the third month of no payment, let's say that's when the initiation to foreclosure begins. So if you do not have a way to be able to repay those 3 months, then and your situation is that okay, you're still unemployed and you're going to ask for another extension for another 3 more months, and here we are 6 months later, and you're not approved for a loan modification or repayment plan, possibly a reinstatement. I don't know what Governor Murphy is going to have implemented 6 months from now, but definitely keep that, you know, um, as a card. Um, you may have the non-retention option as far as maybe listing your home for sale if you have equity, or short sale or deed in lieu of foreclosure. Okay, so you will have those um, other three options available. Okay, now a lot of questions. Another question that I do have is, will I have to make up the mortgage payments at the end of the 90-day grace period? Yes, we've discussed this. The mortgage payments will need to be made up by consumers. However, consumers should contact the institution that services their loan just to understand the specific programs, the terms that are available. No, I'm sorry, will I have to make up a lump sum payment after the third month? Well, again, this all really depends on who backs up your mortgage. If it's a portfolio loan, then that those 3 months are added to the principal of the loan, to the back of the loan, right? But if not, the loss mitigation department has requested that the forbearance payments be added to the principal of the loan if it's a portfolio. If not, the consumer can make a lump sum payment or enter into the repayment plan. But again, specific terms of the forbearance plans are set by the investor of your loan. Okay, consumers can contact the institution that services their home loan just to understand the specific programs. Again, it's very, very, very important for you to know what you are getting yourself into. Okay, now, will it negatively impact my credit report? No. And the reason is because we will not be reporting the delinquency statuses or the entry into a forbearance plan to the credit reporting agency during the term of the forbearance. Now, what I can add to this is that although it's not going to report negatively because again, you're protected under the CARES Act, um, the credit reporting agencies may consider whether there is an increased credit risk due to the lack of reporting. So while we're not reporting to all three credit bureaus for the duration of those 3 or 6 months, that may negatively impact because we're not reporting, right? Um, we're not reporting that you're current and we're not reporting that you're behind on the mortgage payment. Okay, so we're uncertain as to the impact of your credit score, particularly if you are current on your mortgage or otherwise have a good credit score. Because remember, the higher your credit score, okay, so this really plays an intricate part in your credit scoring method. The reason why you have such a high credit score is because you've taken very good care of the credit and because um, there's always some type of constant revolving debt or something that's reporting onto all three credit bureaus. But the moment that um, we stop reporting, then that may have a negative impact on your credit scoring method. So be very, 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 very cautious with that. But understand that at least during this hardship, it's not going to be reporting late. If it is reporting late on your credit, definitely dispute it right away with your current mortgage servicer and show them the document that you have in writing stating that this should not have impacted your credit score and have them remove that late fee or that late um, with the credit bureau. So they would have to call all three credit bureaus and dispute that late that it's reporting on there. Okay, so again, just keep that in mind. Your mortgage servicer can do that for you. Now, um, let's talk about certified HUD counseling agencies, and in particular, Green Path Financial Wellness. Okay, what can they do for you if you are in this type of predicament? Meaning, you don't know what to do, right? You don't know if, let's say, for instance, which road to take. Is it worth it for me? Because this is another instance that I'm seeing nowadays very frequently. A lot of borrowers are saying, okay, you know what, if I am approved for this forbearance plan, I can catch up on my other bills for 3 months. And then by the time that I have to make another mortgage payment, then I'll just continue to make my mortgage payment. But little do they know that at the end of the third month, you still have to repay it. So now, okay, you'll be a little bit more debt free, but now you place your home at risk, right? You're really putting the home at risk because remember what I said, after the third month, that's when the initiation to foreclosure typically begins, okay? Now this is a secured debt that we're talking about. We're not talking about unsecured debts like your credit cards. Your credit cards you can resolve. You can enter into some type of a repayment plan with them, a debt management program, or give them a call personally and see what type of workout options you may be able to come up with them. But as far as your mortgage is concerned, this is the largest debt you have and the most important one because this is the roof over your heads. So it's very important to always prioritize your mortgage payments first. Second is food. Third is transportation costs and utilities, and then the rest is non-essentials. Okay, your mortgage is always, always, always first. All right, so if you are facing difficulties and let's say, for instance, you don't know what to do, you don't know what path to take, you're uncertain, we have a free resource with Green Path. So it's important for you to take advantage of them. Um, Green Path is a certified, they have certified housing counselors that are there to help. They're there to avoid foreclosure, talk to your lender to explore options, and even help you apply for specific programs if applicable. They're going to have a wealth of resources for employment, for energy assistance, for home repairs, anything that may be applicable to you, the HUD counselor will be able to address it and provide those to you. Okay. Also, we discussed credit cards. So they'll be able to help you and see whether or not a debt management program may be applicable to you. And that's when they'll be able to negotiate payment amounts and set up a payment schedule with your creditors with the credit card. So they'll be able to eliminate the late fees, reduce interest rates, and you'll make one lump monthly payment towards your credit cards just to get yourself back on track. They'll also do a credit report review, right? So they'll do a soft pull on your credit and they'll evaluate your credit report. You'll learn how to dispute inaccurate information, such as if you enter into this forbearance plan and there is a negative reporting, they'll show you and help you understand all aspects of credit scoring. So there's a free consultation. Please jot down the phone numbers 877 337 3399, and this is available to all Greater Alliance members. Okay. Now, additional resources. So, what if my mortgage servicer is not communicative or cooperative? So, you can file a complaint with the Department of Banking and Insurance. Okay, and I've included the link in here. You also have additional housing assistance just to see if you're eligible for any state housing programs. These include temporary assistance to households who are being evicted due to a short-term loss of income and temporary financial assistance to help pay for housing and case management services to maintain housing. There are also programs available to help veterans, low-income families, and the elderly, single parents, and more. So this is a really, really good resource to have. I will encourage everyone to go and just to visit this website just to see what is out there for you. And just to further aid homeowners' financial hardship, the New Jersey Housing Mortgage Finance Agency offers homeowners free counseling through its foreclosure mediation program. So the link is there as well. But the easiest way for foreclosure housing counseling services, I mean, go through Green Path first. But if you've received a foreclosure notice with a foreclosure sale date, then you can visit the njhousing.gov/foreclosure for mediation. Okay, mediation is free. Also keep this website in hand just in case for worst case scenario because New Jersey is one of those states where we have a mediation program available. Not all states have it. Okay, so is there a national moratorium? So yes, for some borrowers on March 18th, the U.S. Department of Housing and Urban Development, meaning HUD, announced a foreclosure and eviction moratorium that applies to single-family homeowners with FHA-insured mortgages for 60 days. So Fannie and Freddie will also suspend foreclosures and removals for at least 60 days for homeowners behind on their mortgages. To find out if your mortgage is backed by Fannie, Freddie, or FHA insured mortgage, contact your lender and or consult the National Law Housing Coalition. But the easiest way, as far as FHA mortgages are concerned, you're going to see it on your mortgage statement. You're going to see that you do have an FHA mortgage. Now, if you don't know whether or not your mortgage is backed by Fannie Mae or Freddie Mac, here are the loan lookup tools. Okay, knowyouroptions.com and FreddieMac.com. Those two tools will let you know if whether or not it is backed by either of them. If it is, remember, you will have to pay those 3 months or those 6 months at the end of the forbearance plan. Okay. Now, um, let's go ahead and let's start answering any questions that you may have. Please type them in. All right. So one of the questions that I see, can I end the forbearance early if I get a job and pay the mortgage and can pay the mortgage? Yes, um, you can certainly send the mortgage payments, anything that you have so that you can put towards the mortgage and you can owe less at the end will be definitely helpful. If you have already started this forbearance plan, just know that you can still send in mortgage payments, again, just so that you don't have to owe so much. But let the servicer know what you're doing. You have to let them know, listen, although I'm on a forbearance plan, because you need to have this recorded, you need to let them know that you're going to make the mortgage payment and you want that to be applied towards the mortgage payment itself, the full PITI, and not a payment that's going to be applied towards principal. Okay, so you have to be specific with your mortgage company because, again, remember, you've entered into a forbearance plan. You entered into this agreement. So your loan will be flagged at your current mortgage servicer's end. So once you make the payment, they're going to be confused. They're going to say, hold on a second, but they're on a forbearance. They're not going to know where to place this mortgage payment. So it's very, very, very important that you communicate with them. Okay. What are my options after the third month forbearance and I still haven't found a job? Um, the your only option would be to ask for an extension. Okay, another 3 month extension at that point. Okay. And then once hopefully you'll find a job thereafter or within that time frame, and then you'll be able to resume making mortgage payments. Okay. Can I be evicted from my home? No, you cannot be evicted from your home at this time. Under the CARES Act, you are protected. Okay. For another, let's say, I believe it's one more month. Again, if I'm not mistaken. Is Green Path counseling confidential? Yes, it is very confidential. They do not share this information with the public, okay? However, they do share it with your mortgage servicer if you allow them, just so that your current mortgage servicer knows what you're going through and that you really need the help and that you're really, you're being proactive. You're reaching out to them to see what type of workout options you may have available. Now, while going through GreenPath, you can say, you know what, I don't want this information shared, or you can say to them, you know what, yes, you can share it with the mortgage company because I want to know what are my options. And because I know that you're able to speak on my behalf, then it's important for them to know what I'm going through, right? So if you're facing a hardship and you're looking for a specific recommendation from your counselor, right, from your HUD counselor, then let's say, for instance, at that point, your HUD counselor says, you know what, my specific recommendation right now is a modification, would you like for me to go ahead and conference in your mortgage servicer so that, just to initiate the loan modification, that it's important for you to authorize the HUD counselor to share the information with them. Again, it's not something that you have to do, but just think within yourself of whether or not it will work to your best interest. And you can choose no or yes. Either or way, it is confidential. Is refinance a better option than a forbearance? In my professional experience, if you are employed, if your debts are not high, now is the best time to refinance because the rates are so low. We have the best rates that are out there right now. So I would highly encourage a refinance to reduce your mortgage payment. Also, it's important to to have that option available because what if you're in an FHA mortgage and now you have, maybe 20% equity in your home and you want to eliminate that PMI that you've been paying all these years. It's a better option because first, the interest rate is lower than your current interest rate, and number two, you'll be able to eliminate the PMI. So yes, refinancing is an option. Even if you don't have an FHA mortgage and you have a conventional mortgage and you just want to reduce maybe the rate and the term, now is the best time to do it. Now, if you don't have a job right now, you don't have that verifiable income, then you're not going to be eligible for refinance, right? So maybe a forbearance plan may be the best option for you. It really all depends on what your financial circumstances are today. Okay. Now, also, just a side note, if you think that you're going to become unemployed in a month from now or 3 weeks from now, um, and you're going through this refinance, remember your mortgage company will do a verification of employment 1 day or 5 days before closing. So it's very important for you to have a job to be able to refinance and take advantage of these low rates today. Okay. Um, Instead of a refinance, can a loan modification be done to lower the interest rate? Okay. Um, Instead of a refinance, okay. Well, there are two types of modifications. It all depends on who the mortgage servicer is. So there's there's a modification that's implemented through some mortgage servicers that do not negatively impact your credit score, right? There's another one that does. It's a hardship modification. Now, if you're able to refinance, that would be the best way to go about it, to be able to reduce the rate because a lot of the modifications nowadays do negatively impact your credit score. You have no option of, let's say, for instance, the way that the mortgage servicer decides to restructure and reamortize the terms of the note. So, meaning, um, a lot of mortgage servicers, when they approve loan modifications, let's say, for instance, you have 27 years left to go on the mortgage and you're 6 months behind, but they decide, well, you know what? I'm going to go ahead and I'm going to offer you the 31% HAMP rule, right? I don't know whether or not that's going to be applicable, but if this does come back, then what they typically do is that they restructure the loan and the terms and reamortize it back to a 40-year term mortgage. So you're going to lose a lot of years that you've already paid into the mortgage and you're going to start paying interest once again. Although the mortgage payment is going to be reduced, right? The mortgage payments will be affordable. However, long term, it may negatively impact you because now you're going to owe more. Now you have a lot more interest. Now you have a lot more years and you have more money added towards the principal of the loan. So, will it work to your best interest and eat away on the equity that you've already established? I think that my response would be to that, that if you are credit sensitive and if you want a better deal, although with a modification you don't have any closing costs, but with a refinance you do, the best way to go about it is refinancing the home because you are the one that can choose whether or not you want a 30-year, a 20-year, a 15-year term mortgage, whether or not you want to. It really all depends on the finances. How much do you want to pay on a monthly mortgage payment? So you can also add the closing costs to the principal of the loan and then just shorten up the amount of time because remember, this home is your equity. This home is your investment. You don't want to continue to pay this for the rest of your life. With a modification, it's going to certainly feel like that's exactly what you're going to do. You're going to pay this for the rest of the life because it's going to be reamortized once again. So be very, very, very careful. Know what you're signing for. Just make sure that you know the pros and the cons. Again, Green Path is there to help guide you as well and to let you know, depending on your specific situation, what would be the best course of action, a refinance or modification. Again, it's all tailored to your specific situation because if in reality you really can't afford to be able to refinance because your income is not sufficient to be able to maintain and sustain the mortgage payments, then and your goal is to be able to keep this home forever, then maybe a modification may be an option for you. Again, it all really depends on the dynamics of the home. What is your goal for the home? What is your long-term financial goal? So all of these things do come into play when it comes to making that final decision. Again, my first recommendation would be to refinance now that the rates are so low um, versus a modification. Um, let's say lower the interest rate. My services is gap use, so that refinance cost can be reduced. Okay. Well, if you currently have a loan with us today, definitely give me a call. We can discuss, what are your options, which way should you go. I can certainly let you know, being that we are the ones who are servicing your loan, what would be your best option available to you. So definitely reach out to me and we can certainly discuss it. Okay. All right. Any other questions? Anything at all? Okay. Anything you can think of? All right. All right, great. So thank you all for attending today. You can certainly follow us on Facebook, Twitter, YouTube, and on Instagram. Um, We will also send you a link of the recorded session, or you can view it on our YouTube page as well. So please visit us online to learn a little bit more about the upcoming seminars. You can certainly schedule an appointment. You can contact me, please. This is my personal cell phone number, 908-210-1147, or you can also email me at jasminep